Hey guys, what's up? Alec back with the daily stock market, and look at that, a pretty red day on Friday. However, there was a lot of green in the market as well. If we look at the S&P 500 or ticker symbol SPY, for example, we can see that the market was down 1.5%. So it was a red day overall. If we pull out to the last week, we can see there's a lot of volatility in the market right now, going green and then going right back to red. Overall, it is a downward pattern on the weekly, on the monthly, and on the yearly chart. It'll be interesting to see where S&P 500 goes from here. Will it fall another 10 to 15% or more? Will it rebound or at least a little bit? Are we going to see a dead cat bounce? We're going to answer all this and more, so make sure you watch to the very end of the video. Make sure you subscribe with post notifications on. We're also going to talk about some of the most popular stocks that you guys are begging me to talk about and got some of the most submissions, like Tesla, Meta, and Nvidia. So first things first, let's talk about Tesla. They're down 2% in the week, and they're up in the last 3 months 17%. You can see that it looks like the triple top pattern happened here. So in my opinion, I think we will see Tesla around $235 per share again for long-term investors. Okay, you could have price alerts set at around $205, $215. I think those price alerts will trigger also. Short sellers of Tesla could wait for a dead cat bounce. We can see Tesla in the short term go back to 275 or higher and then head back down to 235 per share after. So in my opinion, Tesla will definitely be 245 to 235 per share in about the next month or so. In the close friends list, I'm sure you guys have seen so far, we've been making tons of money on Tesla. Playing Tesla puts and calls, absolutely perfect. Getting in and out at the right time, exact right time. So if you want to see what moves we're taking next on short term on Tesla, whether that be put options, call options, spread options, or everything in between, make sure you message me on Instagram at the Daily Stock Market. That's where I message every single person back, and you can track all my trades, my buys, my sells on Instagram. So here we have an interesting article pulled up. Tesla reports record deliveries, but numbers are still shy of analyst targets. Wider than usual spread between production and deliveries blamed on logistics issue. Okay, Tesla reported record deliveries quarter on Sunday, but the numbers still disappointed analysts. Tesla said it produced over 365,000 vehicles in the just completed third quarter and also made more than 343,000 deliveries. That was a significant rebound from the second quarter when it reported only 250,000 vehicles built and 250,000 vehicles delivered. Okay, with the production stunted by the Chinese factory shutdowns due to the COVID outbreaks in the spring. Wall Street expected more last quarter, though, forecasting around 370,000 deliveries. Okay, so the 22,000 vehicle spread between production and deliveries was significantly higher than usual. It was about 4,000 the previous quarter. While such a large spread could potentially signal that production is outpacing demand. See that Tesla said the reason was because of the logistical crunch at the end of the quarter. As our production volumes continue to grow, it is becoming increasingly challenged to secure vehicle transportation capacity at a reasonable cost during these peak logistic weeks, the company said in a statement. In Q3, we began transitioning to even more of a regional mix of vehicle builds each week, which led to an increase in cars in transit at the end of the quarter. Remember, also in a tweet Sunday, Elon Musk said that he hoped for a steadier deliveries this quarter. Okay, here we can see smoothing out crazy end of quarter deliveries wave to reduce expedite cost and relieve stress on Tesla team, aiming for a steadier deliveries intra-quarter. Okay, so you can read his response to that article there. Okay, we also saw an analyst, Dan, say, in a nutshell, this quarter was nothing to write home about, and the Wall Street will be disappointed by the softer deliveries than expected. We view this more of a logistical speed bump rather than a demand driven. Okay, he said. So don't worry about the demand of Tesla. That's not slowing down. So overall, I think that is good to see that it's not demand and it's just a logistical thing. Still, Tesla will need to significantly increase the production in the current quarter in order to meet its annual growth target. On Friday, at its second annual AI Day, Tesla unveiled a prototype of a humanoid robot. If you guys saw that, it was all over the news, called Optimus, that displayed finger dexterity. Musk said that the robots intended for industrial use would cost around 20,000 each and could hit the market as soon as 3 to 5 years, though experts were skeptical. Probably be closer to 5 to 10 years before it becomes widely available, because you know how Elon Musk is super ambitious on his goals. The EV maker Tesla is expected to announce its third quarter earnings on October 19th, so mark that on your calendar. It's going to be a very volatile day for Tesla stock. Tesla shares have also sunken 25% year to date, roughly in line with the S&P 500 2022 decline. Now, we did just talk about Meta Platforms, but there's still so many requests talking about it, and that's just because it's at one of the lowest supports that we've seen in such a long time, basically sitting at a 5-year support. We see the lowest price that it was $125 in the last 5 years. Okay, so that means if you bought Meta or Facebook stock in 2017, you would actually be down on your money today, which is unbelievable to think about, considering the balance sheet that this company holds, the value that this company holds, the revenue that this company holds, growth, the revenue growth, the income, the net income growth is astonishing. Okay. Now, we do need to do a deeper dive into Meta Platforms. So let's go a little bit deeper and see what's going on with Meta Platforms. And by the way, in a short-term thesis, I think that Meta Platforms will make newer lows. I think they'll go below $135 per share again. And I have a lot of price targets set at $125 per share, because I think that Meta Platforms will go down to that price range. Now, Facebook is definitely a value stock at this point. They have a PE ratio of 11. They also have a lot of other good things going on as a value stock at $125 to $136 per share for long-term investors. Some risks that we see, okay, regulations could emerge that limit the applications and collection of user and usage data or restrict acquisitions affecting data utilization and growth. Despite rapid user growth, many of Meta customers may also belong to other social networks such as Snapchat or TikTok, so the firm will continually have to fight to capture a user's time and engagement with its properties. Meta is currently a one-trick pony and will be affected severely if online advertising no longer grows, or if more advertising dollars shift to others like Google or Snapchat, which is a very true statement. But they also have WhatsApp that they're building out, and they also have like Oculus that they're starting to build out as well, and the metaverse obviously as well. But that's just some of the bearish points that we can find on Facebook right now. We can see that they are an extremely profitable company with over a $2 EPS, and some quarters we can even see that closer to $4 or $5 on their EPS. And if we look at these recent articles on Meta Platforms, everyone's writing about them right now. You can see today, strong buy from an analyst. It's only a matter of time. We also see Meta Zuckerberg needs to cut to protect its profitability. This is all September 29th, September 30th. A buy, strong buy, another buy rating. Meta, be greedy when others are fearful, which is a great point. Meta shares are trading at the same price in 2017. There are many opportunities for growth despite unfavorable macroeconomic conditions. The near future doesn't look bright at all for Meta, but if you're a long-term investor, Meta might present an interesting opportunity, which I agree with. This is also another interesting one by an analyst. Strong buy. Trillions may be made with the metaverse potential. Meta is investing heavily into metaverse, AR, and VR, making them not a one-trick pony. While lower ad revenue lowers valuation, I believe that long-term potential for the company's new business segment can propel it to new levels not yet seen or foreseen or projected. As a result, I'm highly bullish on their long-term prospects. So if you're going to be buying Facebook or Meta, long-term is really what you want to be holding them for, because there's such big potential in buying Facebook or Meta around $125 per share or even $130 per share. Okay, we even see this one here, another analyst, strong buy. Google versus Meta, which is more attractive? Both Alphabet, Google, and Facebook Meta currently have attractive valuations. While Alphabet has a forward PE ratio of 19, Meta's is even better at 14.3. Alphabet or Google has a higher brand value and a higher cash position and strong credit rating compared to Meta. However, Meta has a higher EBIT margin and shows a higher free cash flow yield. In this competitive analysis, I will show you which of these two companies I would pick if I could only choose one. I see investments in Google as being less risky, particularly due to the fact that its business is less dependent on advertising compared to something like Facebook Meta. And I currently rate Meta as a buy and Alphabet as a strong buy. I consider Alphabet or Google to be even more attractive when it comes to risk versus reward. My investment thesis is underlined by the result of the scorecard in which Alphabet scores a 91 out of 100 and Meta scores an 80 out of 100. Furthermore, it is supported by the results at Seeking Alpha quant ranking system, in which Alphabet is ranked second within the interactive media and service industry, while Meta is ranked 14th, both out of 61 total. Okay. At the current stock prices, I expect compounding annual rate of return of around 18% per year on Alphabet or Google and 16% on Meta. Both are based on calculations of my DCF models. So as of right now, there's very few analysts with sell targets on Meta right now. Most great analysts know the saying, be fearful when others are greedy and be greedy when others are fearful. Mr. Warren Buffett coined this phrase. Okay, so you should live by this. And Meta Platforms is a prime example right now. Every analyst loves them. They have price targets. Some analysts are saying 15% per year for the next 5 years growth. Some analysts are saying even as high as 30 to 50% per year because it's sold off so hard. However, if Meta Platforms is able to capture AR, VR, the metaverse and be one of the biggest leaders in the metaverse platforms, which they definitely could be, okay, we can even see new highs. And there is a world where Meta Platforms could be $700, $800 per share in the next 5 to 10 years. Okay, that sector right now, the whole metaverse sector, is completely untouched. No one knows what's going to happen with that. So yes, Meta Platforms is one of the riskier stocks, but the risk versus reward is definitely is definitely worth it in my opinion. And if you look at something like Google, that might be a little bit more for someone who's not as risk averse. Okay, so if you don't like risk and you want to be risk off, then Google might be one to look into over Facebook or Meta. And something like Meta, for example, that is at a 12% downward movement in the last 1 month, and in the last year it's down 28%. Okay, it's not as like a 5-year low as something like Facebook is. You know, that would have to be a closer to $55 per share. But something like Google instead of Meta could be a lot safer, in my opinion. I think Google is one of the best stocks that's a cornerstone that should be in every single person's portfolio, old or young. I think Google is going to definitely be one of the biggest companies in the next 5 to 10 years, or I should say continue to be one of the biggest companies because they still are currently one of the biggest companies. We can see here, if we scroll down, that they are a $1.2 trillion company with a 17 PE ratio, implying they are a steal right now. You can see I have $900 in Google currently. We have some options going on. Okay, so again, if you want to see what options I'm taking out, we have a 38% gain on this debt spread and buying a put option on Google, which we saw very easily in the close friends list. When it broke this support here, it started trailing down lower and lower. So that's when we took it out. And we're probably going to sell around $86, looks like is the next support and resistance. But in my opinion, I think that for long-term investors, if you got this far in the video, by the way, I'll give you a little bit of a tip. Okay, long-term investors, I think $75 per share is a great price target to have on Google right now. I think there's a good chance that we'll see Google to $75 per share. Hopefully, we'll even see them at $55 per share because that would be awesome for long-term growth. I will love to buy as many shares of Google as possible because I think they are a lot safer than something like Meta, for example. And I think that Google can have just as great as gains and growth over the next 2 years. So these 3 stocks we talked about in this video are power stocks, and they're going to be interesting for every investor to be tracking over the next 5 years. Tesla, Facebook or Meta, and Google. Those were also the most highly requested stocks that you guys wanted me to talk about. So I don't blame you. Those are some of my personal favorite stocks as well. If you want to get on the close friends list and see exactly what I'm buying, when I'm buying, how much I'm buying, go ahead and message me on Instagram at The Daily Stock Market. If you want to see the massive success that we've been having just in the last few weeks, few months, and the last few years, go ahead and click on Success 6, Success 5, Success 4, Success 3. There's hundreds and hundreds of success stories. The green ones that say the close friends list, you won't see those right now because you're probably not on the close friends list yet. But as soon as you get added to the family and you join the family, you'll have access to all my options, close friends list, my 6 close friends list, my watch list, my crypto close friends list, and everything in between. So make sure you subscribe with post notifications on. Make sure you share this video with a friend if you haven't yet. Thank you guys for all the love and support that you've been showing on YouTube and Instagram. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.